Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the marijuana sector. It's been on a very nice run. It's starting to cool down here. We had a big drop for Cronus, ticker symbol CRON. It dropped 30% after Citron came out and made a short call, and then there's a report of a Trump anti-marijuana effort that's going on right now. And so as you can see here, this is an article that I recommend reading. They're attacking right now. The bears are out. There was a big run, so they got a little drop today. Actually, a big drop for Cronus Group. You can see here the article about the Trump administration that's on the BuzzFeed. And so, yeah, it talks about a potential effort to spread negative information on the marijuana sector. And so, adding it all up, it's putting pressure. So this is throwing us a little curveball heading into October with the legalization in Canada for recreational. And so what's going on is canopy growth here. It dropped down to 43.30 in after-hours trading. As you can see here, this is the daily chart, and so it dropped below 70 on RSI, and so that's a red flag. Once it gets above 70, that's a signal that it's strong, and then if it drops below, that's a signal that it's cooling down. Same thing here with the black line going over the red line on Fasto. That's a signal that it's cooling down, and so you want to see Fasto stay above 80. If it dropped below 80, that would signal potential pullback. You want to see the green line stay above the black line on ADX. And so today it closed right at that EMA4 at 44.52 level. That's the pink line right here. Notice how it's been holding during the entire run. All the candles have closed above that level. It closed right at it here. And so right now at 43.30, that's putting it below that level. Okay, so that's putting it down here. And so the key tomorrow is going to be to close back above that EMA4 level. If you see it turn into resistance, that's going to be a bearish change in trend. That's going to be a change in the algorithmic trading programs. That's where you could possibly see a pullback. Definitely you want to see it hold EMA 8 at 42.50. The downside risk is if it drops below that, it could come down and test EMA 13 down here at roughly right around $40. As long as that middle Bollinger Band at 34.72 is holding, the uptrend is intact. It's just a $10 drop between the current level and to come down and test that middle Bollinger Band. Down at that level, there is an unfilled gap, and so you always have to be on the lookout for the market makers trying to take it down to fill that gap. If it did come down to 34, that would set up the gap fill. There is also another unfilled gap way down here, and so yeah, it's always just something to keep in mind. Way down in around 26. Okay, so if you look here at CGC here on the 15-minute chart, you can see here it made a high on the 27th, and then it came down and it made a lower high that day. That was a red flag, and then it broke down into the close. There was the big gap down the next day, and notice that close was below the 50 simple moving average. This was all signals to lock them in on that 27th. It did gap down, had that big drop, and it worked its way back up. But notice that the high on the 29th failed to get back up to the previous levels. And so that was a red flag. It needs to keep making new high closes to signal it wants to keep heading higher. There's a symmetrical triangle pattern formed. You can see descending resistance and ascending support. And right here on this candle, the support broke and it dropped down. So that was your red flag when it broke below ascending support and that 50 simple moving average and 100 simple moving average. And so it came down here. It bounced off of the 200 simple moving average. That's the level it's holding right now on the 15-minute chart at 43.40. So watch that 43.15 level. If it drops below, that could signal a downside risk. You could see it come down here and test that 300 simple moving average at $40. Okay, take a look at TLRY here. Ticker symbol TLRY. So yeah, it closed down 5% today. Still has RSI at 79. You could see the black line and the red line are pinched on Fasto. So if that black line crosses over, that's a signal the bears are taking control. Notice there was a bearish crossover on ADX. The green line crossed over the black line. 80 plus DI crossed over ADX for the first time ever in the history of this stock, and so that is a red flag. Notice today a doji formed today. Okay, and so a doji's at tops sometimes signal, they do signal potential pullback. Right now it's at 58.37 in after-hours trading. It's holding that 50 EMA4, which is currently at 55.74. It bounced right off that level. Look at the lower wick. It bounced off the level, but it didn't quite fill the gap. The gap between Tuesday and Wednesday is still unfilled. And so if it comes down here just a little bit lower, and what was low of day today? It was 55.55. So it looks like it's going to have to get down to 55.50 or a little bit lower, and then that would fill that first gap. And then if you see it, drop down there and below that level, there is a second gap on the chart right here that's unfilled. And so if it did work its way all the way down to EMA 13 currently at 44.50, basically, that would fill that second gap. So that's the downside risk here, is that it consolidates, fills a couple gaps. As long as it's holding the middle Bollinger Band way down here at 35.64, the uptrend's intact. It's just a big drop to come down there and test that level. If you look down here, there is another unfilled gap way down here. I'm not saying that these gaps are necessarily going to fill right away, but they are, potential targets in the future, and they are always targets to the downside. Cronus Group did fill some gaps today, so yeah, keep that in mind. Today on the 15-minute chart for TLRY, it did come down and bounce off of that 100 simple moving average, the gold line, into the close. It closed right below the 50 simple moving average at 59.50. It needs to break that level. Okay, if it can break above that level, then it could push higher, and then you'd want to see it get back above 62. A close above 62 is going to signal that it wants to keep breaking out higher. Right now, it's at 58.37, and so that puts it actually sorry about that, at 58.37. That's putting it below the middle Bollinger Band at 58.50, and so you want to see it get back above that level. You want to see it get above that 50 simple moving average at 59.50. If those levels turn into resistance, you're going to see that 100 simple moving average retested at 56.29. If that level breaks, the downside risk is you've got the 200 simple moving average currently way down here at 48, and then you have this ascending support that's lined up with 55, and so you could see a little bit of a haircut if it did come back here to if those key levels turned into resistance tomorrow. Okay, so take a look at Cronus Group here. It closed down 28% today. You could see RSI's below 70, Fasto's below 80. Once they drop below, that's a big signal that the chart has cooled down. We've got a crossover here on ADX. You could see it's now below, the plus DI is below ADX there, the green line's below the black line. And so, yeah, so this did form the bearish kicking reversal pattern. And so that pattern was confirmed today by the red candle. The bearish kicking formed on this red candle right here, and so today's red candle confirmed that level, confirmed that pattern. The gap did fill between these two candles, and so that first gap filled. The second gap down here, that did not fill. So you can see the lower wick right there. It started to fill the gap, but it bounced off of the top of the gap level, and so it has a little more work to do to fill that second gap. If it broke below EMA 13, currently at 914 right now, what you're looking for is a bounce down here off of the middle Bollinger Band at 766. Okay, so that is the downside target. If it does fail to hold that $9 support level, you're going to likely see that tested. As long as it can bounce off that level, it can keep that uptrend going. A drop below that 760, 750 support zone would be a red flag. That would put it back in this previous channel, okay, inside this descending triangle pattern, and so you want to see it stay above this descending resistance line. You want to see that level turn into support. So it's going to be really important that it holds that middle Bollinger Band. Notice the big volume today. 81 million shares traded on a big down day. So that is a red flag. I mean, if you look at what CRON is putting out, they're saying 350 is the price target, and so that would put it way down here. Not saying it's going to drop down to that level, but I'm just saying, just so you could see, that would wipe out all the gains for the year, and that would put it back in December of last year levels before the big breakout. And so that was his analysis. Okay, so if you look at Cronus here on the 15-minute chart, you could see it came down here, it made a high close, and then it formed a double top, but then it broke out higher. But today that bad news came out, and it really sent the share price lower. Once this 50 simple moving average failed to hold, that was a major red flag. And then when it dropped below the gold line there, that really signaled that the bears were taking control. Look how hard and fast it dropped. There was big volume down here off of this 200 simple moving average. People were playing this $10 level, but it failed to hold. And it dropped all the way down to the 300 simple moving average, currently at 904. That's the big level to hold. If that breaks, you've got the 400 simple moving average down here at 825. As long as it keeps riding EMA 4 and 8 resistance lower, that's going to signal more downside risk. Okay, let's look at ACBFF. All right, Aurora Cannabis here. This stock is hitting the 200-day simple moving average. It's been bumping off of it for several days. It had closed above that level on Monday, but for the last couple days, it had been working on trying to turn it into support. Yesterday it closed above. Once it turns the 200-day simple moving average into support, that's going to be the signal it's ready to head higher. So basically, it needs to be trading above $7. Trading below $7 is going to signal downside risk. It's at a flex point right now in between EMA 4 at 677 support and 200-day simple moving average at $7 resistance. And so going forward, above $7 is going to signal upside potential. If you see it, just to make it an easy number to remember, if you see it trading below 675, that's going to be signaling downside risk. You could see it come down here and test this 50 and 100-day simple moving average in the $6 support zone. It's going to be really important that level holds. If it failed to hold, you've got the middle Bollinger Band and the 300-day simple moving average way down here at 540, and then once again, you've got an unfilled gap way down here at the $5 range. And so anytime you see an unfilled gap for a penny stock, that is a target for the market makers to take it to at some point in the future. It may not happen right away, but eventually it does happen. You can see here there's bearish evening star reversal pattern. Okay, so that pattern is still in play. That pattern did form just a couple days ago. Okay, so that formed right here on this red candle, and so when these two candles formed, that was the bearish evening star, but it hasn't been confirmed yet, and so it's still in play for confirmation. And so you can see it's a 3-day candlestick pattern. It's a major reversal pattern. There was a red candle today, so keep an eye out for confirmation of that pattern as well. And then now, if you look here at APHQF, these are all the top marijuana companies in the world right now for the producers, and so this did close down 2.3%. This is really, it has a strong chart going. It has big volume. Okay, so this has been hanging in there, even with the other stocks, pulling back a little bit. It's still holding EMA 4 support, similar to TLRY. It's going to be all about staying above that $12 level, above 1180. Okay, if you see it drop below 1180, that could signal downside risk. You want to see it bounce off that 200-day simple moving average at $10, basically, if it pulled back to that level. Because if that level broke, there is a gap down here, okay, from last week. And so the gap would put, to fill that gap, it would have to drop all the way down here to the 50 and 100-day simple moving averages. It's also converged with the middle Bollinger Band down at 880. Okay, and just below that's the 300-day simple moving average at 857. What needs to happen is it has to break this resistance from back here in February. It's basically that 13 to 1350 resistance zone. If it can get above that, then it could work its way up here to $18. That was the high from back there in January, the high close resistance zone. And so what it's doing is it's filling the jar, and so you want to see it work its way back up to those levels. Okay, so if it does drop below EMA 4 at 1188, just keep in mind that that 200-day simple moving average is a really big level to hold. Okay, let's look at IIPR here. Okay, so this is the real estate marijuana company. It's been pushing really hard. It has RSI at 79, Fasto at 92. What's going on is it's on a multi-day run. Look at all the green volume bars down here in a row, and so this is nothing goes straight up forever, and so it did form a bearish reversal pattern, bearish doji star. Okay, so when you get when a doji candlestick forms during an uptrend, many times that signals a temporary top, especially when it's a gap up open. And so it did push higher today. It formed another black candle. This candlestick pattern is still in play. It needs to drop below. Okay, so it needs to drop down below that doji from yesterday to try to confirm that pattern. Okay, if it does. If not, what you want to see if you're a bull, you want to see EMA4 continue holding. As long as that level is holding, the chart's super strong. Once they let it break, it could come down there, test that EMA8 at 40.89. You do have the middle Bollinger Band way down here at 37. So this is a really strong move. It's been pushing super hard. We'll just have to see if it can continue or if it's going to pull back and take a breather. Okay, take a look at IGC here. Closed up 11%. You've got RSI at 76, Fasto at 85, a crossover on plus DI. So today the bearish Harami reversal pattern formed. Okay, so you have the black candle inside the previous larger white candle. And so, yeah, this is just signaling that it could take a breather. What you want to see is that EMA4 at 161 hold. If it dropped below, you have a gap down here. And so the top of the gap's lining up around $1. And so that's going to be a huge level to hold on a pullback. If it broke below that $1 level, it could drop all the way down to 77 to fill that gap. And so that is the downside risk. There is also another gap way down here at right around 54 cents. So it dropped to 54 would fill the two gaps. Not saying the gaps are necessarily going to fill right away, just saying that that is the downside risk if it starts working its way below $1.60. So far it's got a really strong uptrend. It has to hold support to keep pushing higher. So take a look at MJ here. This is the Alternative Harvest ETF. Yeah, it's got a nice uptrend going. It did form a bearish reversal pattern, and then it confirmed that pattern, and then it formed bullish one white soldier yesterday. And so, yeah, there was the bearish three gap ups formed, and then that pattern was confirmed in this red candle on Tuesday. And then yesterday, a white candle formed, following bullish one white soldier, where it was looking like it was wanting to break out higher, but then there was the head fake today with the red candle. So this has just been back and forth. It's been a real whipsaw action for the marijuana sector. Many times you see that kind of action near temporary tops. What's going on is it has to stay above 33. If you see it drop below that EMA4 at 33 level, it's likely to come down there, test the EMA4 at EMA8 at 32, and then the big support levels way down here at around $30, $30.30. I've got the 200 and 300-day simple moving averages. There's a gap just above that level. And so, if it came down there and hit that 30-50 support zone, it could fill that gap, bounce off of support, and then possibly launch off that for the next push higher. Okay, so yeah, keep an eye. There are multiple unfilled gaps for MJ as well. Sometimes ETFs don't fill gaps the way stocks do. It just all depends. If you look here at HMLSF here, this is Horizons Life Science Index ETF. And so, yeah, it's thinly traded, only 74,000 shares, but it did break down. You can see RSI is below 70. This is following the Canadian marijuana companies. Fasto is still above 80, but it's cooling down right now. You want to see it stay above 80. Once it gets below 80, that's when you start getting the pullbacks. You can see here on these pullbacks, when it gets below 80, it really gets going. And so that's when you really know the chart's cooling off. And right now, yeah, basically it has to hold the EMA4 once again. They have the Eiffel Tower kind of pattern going where they pushed really hard. They had the parabolic run. And so many times you have to get a fib retrace. It's not necessarily going to be 100% retrace, but you could easily see the 27, you could see a 30-40% retrace on this, bringing it down. At least maybe not that big, but you could see a pullback possibly if it cools down to this middle Bollinger Band and 200-day simple moving average level. You can see all the moving averages are converged down here. And so that is the downside risk if EMA4 support breaks and it fails to stay above 16, is it comes down here and it tests this 13 to 1375 support zone. Okay, so just keep that in mind. It has to keep pushing higher. It has the climax spike going on here, where you've got the push higher, and then you've got the big giant volume spike, and now volume's dropping and the share price is cooling down. And so you just have to, we'll just have to see if the bulls are strong enough or if it's going to get the pullback. So this, once again, it formed the bullish one white soldier reversal pattern. All right, thanks for viewing this video. Yeah, we're going to see if, the marijuana sector can bounce off of support while it's in an uptrend on the daily chart, and this is just a temporary hiccup, or if it's going to have a bigger correction. Keep in mind mind, you know, the legalization for Canada is in October, so that's still a month away at least. Okay, thank you.